Here's the TCS top brass speaking with us one-on-one, talking about the earnings and, of course, the visibility as well going forward as the company crossed the $30 billion revenue milestone with deals worth about $12.2 billion during the quarter.
TCS has announced quarterly numbers and all eye remains on how India's largest IT company has fared in an environment where macros are challenging, the deal sustainability is important, and more importantly, the US policy changes are happening. To discuss this and more, I have with me TCS management, Kriti, Milind, and Sameer. Welcome to ET Now. My first question to you, Kriti, will be, has there been some discussion with US clients on the policy changes which are happening in US and particularly the to and fro on tariffs? Is it concerning?
I won't say concerns, but everybody is watching this space and different industries are looking at the impact in a different way. And also we saw towards the end of last quarter or maybe middle of last quarter, consumer confidence also index went little low in US. So there are, like you said, it's mixed signals. There are certain industries, for instance, our banking financial services still seems to be resilient. Consumer business and auto, there are some worries. Okay, so it's a mixed bag, but we are staying close to our customers and trying to understand what would be the best possible way that we can support them at this juncture.
Right. Last time when we spoke, you said that CY25 will be better than CY24 and CY26 will be even better. Do you stay on your guidance?
First thing, at least if you look at FY25 has been better than FY24. So at least we have delivered on one part of the promise. We still stay confident that FY26 will be better than FY25. See, like if you look at our order book, we announced one of the strongest order books without the support of any mega deals, almost $12.2 billion coming. Our pipeline remains strong. There is a fair bit of discretionary projects in the 12.2. So while I believe these uncertainties will settle sometime soon, and in the medium to long term, our business model is quite resilient.
Right. I want to understand from you, Sameer, on margins front, what has been reason for decline sequentially, and how do you see FY26 in terms of margin? Do you see an improvement is possible in coming quarters?
Okay. Our margins, our sequential margin was at 24.2%. It has been a decline of 30 basis points. And if I were to walk you through, overall, the major reasons have been investment. We invested into talent in terms of tactical interventions, which we did, and we invested into capability building, as well as expansion of our infrastructure. And we got towards that, we approximately invested about 160 basis points, and that was offset primarily by operating leverage improvements, about 50 basis points, and about 50 to 80, and there was support from currency coming in. So that sums it up.
Overall earnings, what Street estimated, revenue has been slightly below. What has been reasons for the same?
First of all, I just want to clarify. One, all the major markets have grown positively this quarter, and more industry verticals also grown. Like maybe some of them have grown only marginally, but for instance, CMI has turned positive. However, marginally it may be after quite some time. Our technology services has turned positive, and of course BFSI and ERU have been positive. So I would say the major market has been a good story. Okay. Of course, on the India side, we are, as you know, that we are coming to a closure of a very complex nation building program, and we are quite happy with the way that program is completing and yielding results to the vast majority of Indian population. So on the whole, I would say that major markets have performed to the expectation of the market as well, street expectation.
What is the status on the BSNL deal? Because in the last quarter you mentioned that till Q4 most of the work will be done. Does that guidance remains, or some of that spillover will be there in Q1 as well?
We are I think most, at least from a project completion perspective, for almost 100,000 sites, all the equipment have been delivered. If I remember right, close to 90,000 sites have been commissioned. Significant part of those towers are carrying commercial traffic. So the original contract is for about 100,000. So a significant part of the work is done, and there will be some remaining residual work. But of course, there could be additional change requests for additional sites that can come, that we would want to participate in that program as well.
Milind, in the last quarter, I remember 40,000 was a number you mentioned regarding the hiring. How does the FY26 look like? Now we are at closure of FY25. Does that hiring trend continue in the next financial year as well?
So we have onboarded 42,000 trainees this FY25, and FY26, as I said in the last quarter also, it will be a similar number, if not more.
So generally, there is a way of navigating through IT companies. When you see more of hiring numbers, the growth is there. But that balance is going to change. You think that kind of narration will continue?
I think, hiring on campus is a core strategy for TCS for many years. And irrespective of, minor changes happening on the business side, we continue to hire. We have been hiring all through every year for the last couple of decades. Now with this kind of hires.
If I see overall environment, particularly, I ask you the question because US is your major contributor. It has declined to 48% if, from the last quarter. Also, there is a sequential decline if I see it correctly. How do you see the changing policy environment impacting particularly the deal's dilemma? Because there will be some clients who will say that since there is no clarity, even on tariffs, there is a to and fro, now 90 days pause. How do you address those things?
First of all, Ankur, I don't know whether I understood you correctly. On a sequential basis, North America grew for us. Okay, there has not been a decline. That's why all major markets grew last quarter. Okay, but overall, see, like you said, the discussions on trade policies, actions, this space has been quite busy. And our customers are also trying to understand how it impacts them. And that's the reason you find some of the customers, particularly in the consumer business or airline, some programs have been paused and some decisions have been delayed. But at the same time, we have not heard any major program getting cancelled. I don't think there is any panic reaction amongst our customer base as well. They are watching this space, and they will wait for some clarity to emerge over the next few weeks or months.
Your TCV has also grown more than $12 billion this time, and last quarter, if I remember, the number was around $10 billion. Yeah. So, if you talk about the guidance and the performance gazing in terms of how TCV is performing, what should we expect TCS to do in the next financial year?
I told you already, we expect to do better than FY25, and if you've been following, this is the best guidance we can give. We don't give any further forward-looking guidance.
Right, and also when you talk about India particularly, there is a growth. What is your strategy in India? Because the share is around 10% now. How do you see India as a market?
We see India as a huge growth opportunity. There is no reason why it can't be maybe as big as UK or Europe at some point in time. Okay, we are quite bullish on India, and India is a market that will continue to grow and continue to adopt technology in a significant way. And our strategy is to participate both in the public sector and the private sector. and help them leverage technology in as bigger way as possible.
Right. If you talk about Europe, how has been the performance from there? Has the execution improved?
When you say execution, again, Europe also has grown. In fact, Europe has grown for the entire year and for the quarter as well. So it's been a good turnaround for us. Execution wise, we've been almost all parts of Europe. We've been participating in multiple opportunities, both in the cost optimization space as well as in the transformation space, and we've been winning and participating and winning many deals in Europe. So we are quite happy with the execution of our strategy there.
Overall, how is the deal pipeline looking for TCS?
It's quite strong. See, we don't give out those numbers, but compared to if we compare with where we would want it to be, it's quite strong.
And you had also mentioned earlier about that you should aspire for double-digit growth, but in the current environment where there are macro challenges, do you think that will be pushed further, or do you think this is still in your sight?
See, it's aspirationally, yes, I aspire for double-digit growth even in this environment. Why should I not aspire for? Our entire organization aspires for that. And I believe even uncertainty brings in a lot of opportunities. In certain, when it's more than uncertainty, these are the situations where our clients try to look for more cost optimization initiatives, and we are participating well, and we also are participating in many technology modernization initiatives. In fact, for one of the large clients, our teams are migrating almost 50 million lines of COBOL into Java. So we we participate in some of those marquee large programs. So personally, I don't know why I should not aspire. If you ask me, will I reach a double-digit growth? That's a forecast I cannot give you. Will I aspire? I will aspire.
One last question before I let you go. Sequentially, there is also growth in BFSI. Does it look better than what it was there in Q3? And overall, which are the sectors you see will be the levers of growth?
BFSI definitely is looking quite robust for us. We find, as I said, even within manufacturing, auto is not that strong, but most of the other segments in manufacturing are looking strong. We believe pharma and healthcare could also turn around. We had some anemic growth, but life sciences, pharma, healthcare would turn around. I think these sectors would definitely, CMI, I want to wait and watch because of the overall uncertainty. But though it has shown one quarter of improved growth, I'll probably wait and watch.
All right, thank you so much for talking to us. This was TCS management, which is watchful of the current macro conditions, what is happening globally, but does aspire for double-digit growth.
All right, so that was the top brass of TCS talking about the outlook for the company going ahead, though they do highlight that the uncertainty in the near term still persists, but they're also highlighting that they expect FY26 to be better than what they have done in FY25. So let's watch out for TCS, post the numbers and post some miss versus the street estimates. There are a lot of brokerage notes wherein majority of the analysts have cut the target price on TCS.
If you like this video, then like, share and subscribe to ET Now.